Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined in the chat by my good friend, Michael Fairborn, who is a 20-plus year veteran of the financial markets. There's the opening bell. That means it's time to get going. Michael's there to help answer your questions in the chat. I hope that you will participate in the chat. Usually it is a lively group early in the morning. If you're watching this in the recorded version, welcome to you as well. Leave your questions and comments in the comment section of the webcast. Thanks for being here. We're going to get rocking and rolling right away. And there's some stuff afoot this morning. We've got a speech from Jay Powell later today. We've got major earnings on tap, and that's having an impact on the market. So we're going to see what that looks like here in just a minute. And I want to talk a little bit about what's going on in the silver market as well as Ethereum. So we're going to jump into that here as we take care of a couple of quick housekeeping items this morning. Remember that everything we talk about simply for illustrative and educational purposes only. It is not a recommendation. This is simply a function of education. These are illustrative examples. Futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you're aware of the characteristics and risks of trading futures prior to considering any futures strategy. Read the risk disclosure statement for futures and options before doing that. Remember also that futures trading is not suitable for all investors. It requires separate trading authorization. Now, I'm going to give you some resources to learn a little bit more about futures basics and the understanding of margin today as well. And we'll talk about that as we get into the discussion. Though, remember, as we get into this process, keep in mind, if we talk about virtual currency derivatives today, and I mentioned that we may very well do that, remember that they involve unique and some significant risks. Make sure that you read the NFA Investor Advisory Futures on Virtual Currencies, including Bitcoin, and you read the CFTC Customer Advisory, Understanding the Risk of Virtual Currency Trading. Both of those are linked in the description of this webcast so that you can take a look at those. Make sure that you do that. It's always a good idea to understand those characteristics and risk, especially when there are specific circumstances like that. Now, make sure you carefully consider whether trading virtual currency derivatives is appropriate for you in light of your experience, your objectives, your financial resources, and other relevant circumstances. Virtual currencies are a digital representation of value that functions as a medium of exchange. However, does not have legal tender status, at least not yet. And we're moving towards that area. I'll talk a little bit about that this morning. Now, we're going to be using the Thinkorswim desktop software platform, specifically the paper money version of that. And it is a great learning environment. It is a great sandbox for practicing. However, it is not a guarantee of future success out there in the real world. We're also going to use technical analysis in this discussion today. Technical analysis is not the only way to look at the market. It is theoretical in nature, as are other methods of looking at the market, and none of those are guarantees as to what's going to happen. Therefore, Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Also, remember, investing involves risk, regardless of the instrument that we're using to invest. And in the case of futures contracts, potentially more than your initial investment. Stop orders in futures trades are not guaranteed in execution. In fact, due to exchange rules, they will be substituted by an exchange-designated limit order for that originally triggered market order, and there is the possibility that those orders do not get filled. So let's do this. Let's jump out to the Thinkorswim desktop software platform here really quickly. And I wanted to take a look at what's going on here really quick in the silver market. So I happened to notice this morning, and I was looking at silver, and this is the SI/SIL contract. So this is the 1,000-ounce contract. It is the smaller of the silver contracts. It is smaller than the /SI contract. And what I was noticing this morning, originally looking at the potential for taking this as a bullish trade, because it was seeing some very strong momentum to the upside. Now we're kind of seeing a little bit of a reversal of that as the cash market has started to open. So the commodity channel index, that strength gauge on that longer term chart, has been backing off a little bit. We see a candlestick pattern here on the longer term chart that is representative, perhaps, as a little bit of a test of some resistance. And if we draw that resistance area in here, just looking at where that area might be anecdotally, you can kind of see where that has been. We tested a little bit above it. You can see it appearing over here on the shorter term chart. This is a today's 5-minute chart on the right-hand side, and you can kind of see that pressure breaking down below. So we got that little bit of a test, 3 or 4 5-minute bar candles or 5-minute candles above that area. Now seeing that pressure to the downside, and you're starting to see that momentum in the MACD histogram. Now MACD is going to lag a little bit. We've talked about this. There are any number of oscillating indicators that you can use on a short-term basis, right? Now, this is a 5-day, 5-minute chart. This MACD histogram on the right-hand side uses a 12 and a 26 moving average convergence divergence. That's a 12 5-minute bar and a 26 5-minute bar moving average. So it's relative to the shorter term time frame. It's going to lag a little bit, but it is also going to be a fairly quick indicator of a momentum shift, as we have seen here when the histogram has gone from above the zero line to below the zero line. Now we're starting to see that downward pressure. So looking at potentially fading this initial move that we saw today, we're starting to see this make that move to the downside. So my thought in this particular case, based on the technical analysis perspective, would be to go short this /SIL contract in the short term, looking for this to perhaps come back down into this support area around the 39.04 mark or so. And we'll just kind of draw a support level there. So back kind of retracing that move. Now we're getting a little bit of a hammer candle here. So this is a potential for this to move back to the upside. So the thought process then would be on the other side of the equation to take the trade off if it goes against us up to this 39.71 level, right? So you can kind of already start to see if our entry point is going to be around this area, around the 39.39 level, our potential gain to the downside versus our potential risk. And again, this is theoretical in nature, right? But the potential risk is to the upside in this particular case, but we're looking for that move back down to at least that level there, and maybe continuing to the downside, but we're going to look at taking that trade off if it gets down to this support level. So let's do one or two other things really quickly before we start. I'm going to maximize my sell here, and we're going to talk through the numbers here. And we're going to kind of look at this. So tick size here is 0.005. So what that means is that our significant digit that we're paying attention to is this one right here, the 39.470. The significant digit that gives us a tick is this one right here, what's now 0. You see that it went from 0 to 5. So it moves in 0.005 increments. And so it's going to go from 0 to 5 to 0, 0 to 5, 0. That's what you're going to see in that tick value movement. So each tick then is going to be worth $5, which means that a point change, 39 to 40, is going to be worth $1,000. Total notional value of this contract, $39,480. Really quickly before we go into this, /SI, if we were looking at the larger contract, you see that the tick value is 25, still the same significant digit, still the same number right here. The contract is larger. So the point value is 5,000. So this goes from 39 to 40. That's a $5,000 change in value in the contract. And you can see the notional value of this contract is larger. So if we go to /SIL, that is a fifth of the large contract. So that's the difference between these two contracts. Now let's pop back over and let's shift to our shorter term chart. Getting this kind of long-legged spinning top here at that potential support level. So we're kind of starting to see that support. But momentum is still moving to the downside. Like I said, though, that's going to lag a little bit. So we've got to determine at what point we're going to enter this particular trade and how we're going to put this trade together. So I'm going to put this together as a sell with an OCO bracket. And we're going to sell this contract. I'm just going to zoom in so that we can see this a little more closely here as we'll put this trade together. And we're getting that little bit of bullish movement here. The potential is there for a bounce. Also, the potential is there for that move to the downside. So what I'm going to say is, look, if this moves below 39.39, so we're going to actually look for some definite Downside push. I'm not going to kind of whiffle waffle on this in terms of getting into the trade. I'm not going to get in when it's going up simply because I don't want to get on the bus that's going the wrong direction. I want to make sure that I'm on the bus that's going in the direction that I want it to go. So I'm going to put my entry, and you can see where that next candle has now opened. So I'm going to draw a line just at the bottom of that previous candles, and I'm going to look for a break of that level of support to get into the trade. And if it doesn't, then we've missed the trade and it didn't go in that direction. We could reverse, but that's what I'm looking at just from that setup here this morning. So what I'm going to do is I'm going to create an order that is a sell custom with OCO bracket, and you can start to see that candle is starting to turn again. So we're going to get in if we can sell this at 39.39 or better. Now, if we were to just do that right now, that's going to get us into the trade because selling at that price or better is higher. We don't want to get in when it's higher. We want to get in when it's lower than 39.39. So I'm going to change that from a limit to a stop. That's going to designate an exchange, or that's going to create an exchange designated limit order that's going to get worked. That may not fill if that price moves very, very quickly, either upside or downside. That may not fill. If it were to just be like a regular equity, right, and it generates a market order, then that market order is going to fill at the next available price, whatever that price might be. So the next tick might be higher, the next tick might be lower. But with the futures contract, because there is a potential for fast movement, the exchange works that order as a limit order. And that's something to pay attention to if you're considering where that order might get filled. If you wanted to specify where that limit order is, you could change that from a stop market to a stop limit order and designate your own limit order. There's still the potential that that order does not get filled. So that's important to pay attention to, right? Okay. So let's take a look. We're going to make this a stop. I'm going to keep that as good till as day order because I don't want to carry this forward because we're trading this on the shorter term bars. Now, I'm going to look at exiting the trade, meaning buying it back at a stop price if it goes to a particular level, and buying it back if it goes above a particular level, right? So I want to buy this back. So this is going to be my profit target down here to the downside, 39.03. So I'm going to change this to, let me make sure I've got that number right, 39.04. So let's put this one down here. And that's going to say buy it at this price or less. Remember, better. Limit always says or better, right? That when that word limit always says or better. And when you're buying something, or better is less, right? So 39.04 would say buy it at 39.04 or better if it goes down through 39.04, which is down here. That's our support level. I'm going to make that a good till canceled order because what if it goes through tomorrow? That's fine. Nothing wrong with that. And I'm going to say take this off, okay? Take this off because we're going short this contract if it goes to 39.71 or above. So I'm going to make that a buy stop because to close this down, we're shorting it. To close it down, we got to buy it back. So it's going to be a buy stop order, and that buy stop order is going to come into place at 39.71, 39.71. And we're going to make that good till canceled. Now, the other thing, too, is that's going to work as a market order, just like that sell stop does. And so that's going to get worked. There is the potential that this goes above that level. So, you know what I'm going to do is I'm going to double up on this. Now, here's something to pay attention to. I'm going to right-click up here, and I'm going to put in an alert. And we talked a little bit about using alerts last week, right? If this goes at or above 39.71, I'm going to make it 39.71. There's 39.71. And I'm going to create that alert. Now, look, this says notify with sound and mobile. What happens if the mobile network is down, right? What happens if you don't hear the sound and you don't get that alert? So that's why I'm kind of doing a belt and suspenders here. I'm putting that order in, plus I'm putting that alert on there. Because what if we miss the alert? That is a real possibility. What if the alert doesn't get sent? What if the alert can't get to you or your phone's off? So relying on the alert solely to make a decision, to trigger you making a decision, is something you got to pay attention to. So we've put an actual order here in this particular case, that buy stop order, plus we put an alert on there, doubling up belt and suspenders. Generally not fashion forward, but it's generally a good idea if you want your pants to stay on, which is always a good thing, right? Okay, so now we're going to read through this order, make sure that this is what we want it to do, and make sure that we're aware of the transaction costs of this trade. And we're going to put this in our futures contract, and we're going to click on send, and we're going to wait, because that's what we're doing now at this particular point, is we're waiting for this order. We've got that that sell stop that will trigger, and our next candle has moved to the downside. So we're starting to see, again, more of that downward pressure. And you can see that the MACD is continuing that downward pressure. So to be honest, this isn't what I had expected this morning, and we're starting to see this little bit of a reversal. So there is a possibility that this could bounce off of this support level. You can see that this was a level of support and resistance before, and it could move to the upside. And if it does that, you know what? That's okay. Because just because I want something to happen, right? Just because we want something to happen in terms of a particular trade doesn't mean it's gonna happen, right? In fact, right now we've got pretty close to a close above the high and the low day. So some of you are going, well, geez, why is he thinking bearish at this particular point, right? So we could look at that possibility of a bullish entry. And in fact, if we really wanted to be kind of covering our bases and we want to do belt suspenders and like a rope that we wanted to tie around our waist, we could look at creating a bullish order here as well as a separate order. The problem is, if you do that, and you've got the other order on, you could end up in a situation where you get entered in the long position, and then you also, if it moves down to the downside but hasn't triggered your stop order, you could get into the short position as well, because those would be two separate orders. Now, you could do kind of a branched OCO conditional order that if this one doesn't fill, then this one fills. We can get into the complex logic of that, but that gets really complex. I want to keep things a little more straightforward. And speaking of keeping things a little more straightforward, I wanted to give you some information about where you can learn more about trading futures. In fact, you're going to see some stuff coming out next week talking about trading futures at Charles Schwab. There's some marketing campaigns that are going on, but I wanted to take you here really quickly. And in this particular case, we're going to go to schwab.com/futures. And if you're logged into your account, you can go here. If you are not logged in or you don't have an account, you can go here and you can see this information. But this is a great starting point. Schwab.com/futures. And you can see right there, it says this is your home for futures trading. So how do you start learning about futures? How do you explore the markets? Why trade futures and why trade futures on the Thinkorswim platform? All of that information is right here. You can find futures education. You can find our coaching webcasts right there as well. But what I wanted to do is I wanted to take you to this page right here, which is Introduction to Futures. And we're going to move from that overview to the Introduction to Futures. So some of you who are brand new to this webcast, welcome. We love you being here. Here's how you find out what are futures contracts, why trade futures, what do they mean, what are some of the characteristics of trading those futures contracts. You can also open an account or apply for futures trading authorization right here. You can look at things like uses of futures, some of the things that we've talked about, right? There are a lot of different resources that you have here. Now, we've talked a lot about those contract specifications. We've talked a little bit about margin. If you want to jump right here to where it says futures margin, this is information that talks about what is futures margin, how does futures margin work, how to get into a position, right? There's a guide to futures margin. You can see what that margin requirement is. You can see the types of futures markets and so forth. So lots and lots of information here for you to be able to learn more about trading futures. And what I'm going to do is I'm going to put this in the chat and share that with you, just so that you've got that link right there. You can pop into this particular page. And while you're out here, let's talk a little bit about where you can go for more resources about specific questions. You can come right here to our Trader Talks webcast page. You can click on the search box and you can type in futures, and you can get the playlist for trading futures. You can get individual webcasts that talk about them. Last week we talked about using Fibonacci's and other things. And always do me a favor, click on that subscribe button if you haven't already. in this particular case. If you haven't already clicked on subscribe to the Trader Talks webcast channel. It's at no cost to you, and it's a great way to keep in line and in contact with the community at large that's here following Trader Talks webcasts. Cool. All right, so let's do this. Let's pop back over here to the Thinkorswim desktop software platform. It looks like just one or two people are seeing that screen issue, Dan. So maybe not widespread. Maybe try restarting YouTube. Maybe try stopping and then restarting the stream, if you will. So pause it and then restart it. All right, let's take a look really quickly. I'm going to pop over here really quick to our futures grid and kind of see what's going on with the index futures this morning. Seeing a little bit of a spinning top doji type candle day today, and I think that's a little bit of wait and see mode. So we're starting here with the Russell 2000, which has been kind of in wait and see mode for the last couple of weeks, right? We've talked about this, kind of sitting there and spinning, if you will, at the moment. And that is ahead of next week's Fed meeting, the Jay Powell speech today. I think some concern on the part of small caps in terms of interest rate moves. The S&P 500, again, with earnings, we're right in the middle of some big earnings season movers, right? We've got Google earnings, we had LMT earnings, we've got a few others that are coming that could potentially be market movers. And we're seeing the market kind of caught here at the moment, maybe in between not the moon in New York City, but at least caught between a level of support and resistance here. So sometimes the best that you can do is look elsewhere. Taking a look at the NASDAQ, which has been arguably stronger. Kind of see that RSI pushing a little bit higher here. That RSI is backing off, maybe diverging a little bit here as we've got a lower low on the RSI and a higher low, at least at the moment, on the price of this futures contract. So in the short term, seeing a little bit of this move, maybe back down to a level of support. So that's something potentially to pay attention to. So other futures contracts, as we take a look at this really quick, I'm going to pop in here really quickly. We're going to look at /CL, just kind of seeing what the market's doing. So crude oil still seeing some downward pressure. This is something that we looked at using our Fibonacci tool last week. We were looking at shorting this in the micro CL contract as it broke below that 50% level, making that move back down towards those moves. If we were looking at this, retracing its steps back through the move that it made off of that 55 low. So still seeing some downward pressure. We're seeing the RSI breaking to the downside. If we looked at /MCL, the micro contract, we're seeing the same kind of thing, right? That downward pressure potentially into a support level. /GC to go along with our silver discussion. Gold, on the other hand, starting to move higher here. Again, not at the high that we've seen, not back up to those previous highs. So maybe starting to squeeze a little bit. If we were to draw a diagonal trend line here, gold kind of getting squeezed. And I think we may see a little bit of wait and see and continuing squeeze on this until we get that interest rate information coming out of next week's Fed meeting, right, on the 30th. So that may be that wait and see mode kind of for gold. Now, if we take a look kind of off of what's going on with gold, I want to look at kind of the gold that comes out of the ground, and that is /ZC, because I've been watching this for a little bit. And this is corn. So these are the corn futures. And one of the things that I've been noticing with corn, technically, just from a technical analysis, and there goes our silver contract, it filled. And so we are now short that silver contract. So it broke below that level. So I've been noticing this little bit of a channel let's grab this diagonal downtrend channel. Let's grab that channel line. We'll draw that channel. And here's our lower area of the channel. And so this has kind of been staying within that range. I'm going to change this channel tool up a little bit just so that we see a little bit differently. So I'm going to go edit properties, And I'm going to change the color so that it matches my levels of support and resistance. I'm going to make this a little bit wider so that it is easier to see. And I'm going to do one other thing. I'm going to put a midpoint to this channel. I'm going to make it yellow, and I'm going to make it a dashed line. And I'm going to click on OK. Because oftentimes the midpoint of a trend channel like this can act as a level of support or resistance. So that can be a trigger or a decision point, if you will, for entering or exiting a trade and looking at that move to the downside. So we may come back to this and take a look at this in the shorter term time frame, looking for that downward movement in the continuation of this channel. Not that there's any guarantee that this channel will continue, and we're starting to see the RSI ticking a little bit higher here, a little bit of a bullish divergence on the RSI in gold. But that is a possibility for this to continue to move in the downward channel, technically. Now, I'm going to come back over here really quick. Let's go to this /ETH. And we're going to look at the micro contract for this as well. But what do you notice about Ethereum here recently is that with the passage of the Genius Act and with other legislative changes, that there is the possibility of some movement, certainly in Ether, which is representative of what's referred to as stable coins, and also in /BTC. And again, I mean, I want to remind you of those disclosures that we talked about. Make sure that before you consider trading these futures contracts on virtual currencies, you understand characteristics and risks of these virtual currencies, and you understand the advisories about trading the derivatives on these virtual currencies. So Bitcoin has been moving higher, but not at the same trajectory that /ETH has been moving higher. In fact, I just noticed a news story in the last couple of days in terms of Ethereum and Bitcoin that some of the large banks, including JP Morgan and others, are considering the possibility of allowing these currencies, these virtual currencies, to be collateral for loans, which would change the game theoretically significantly, right? There's still some banking regulations that may prohibit that, but that is a huge switch. And one of the reasons perhaps why we've been seeing these virtual currencies moving to the upside. So what I'm going to do is I'm going to pop over here really quickly. We're going to go back to our futures movers grid. And we're going to take a look at /MET, which is the micro ether futures. The micro ether futures. And so what I'm going to do, let's pop open our left-hand side, and let's look at our contract specifications. So this is the smaller of the contracts, right? We have the /ETH, which is the large Ethereum future, and this is /MET, which is the micro Ethereum futures. And our tick size is 0.5. So this is our significant digit, the one right after the decimal point. And you see that tick size is 0.5. So this moves from 5 to 0 to 5 to 0. When this number moves, 3656, from 6 to 7 or 6 to 5, that is a point change. And that point change in the value is 10 cents. So that means the tick value is 0.05. Now, that means the notional value in this small contract is $365. That's significant in that this is, again, talking about the size of the contract and the impact in terms of initial margin for the contract. This is a smaller contract. If you were to use the larger contract, /ETH, now that changes, and it changes significantly, because look at the large contract. Tick size is the same. Tick value now goes from 0.5 to, or 0.05 to $25 per tick, right? And a point value is now $50. So every time that changes from 2 to 3 or 3 to 2 or 2 to 1, that is a $50 swing in the value of that contract. Notional value then in the contract is $182,600, which means that the initial margin and the maintenance margin for this contract is going to be significantly larger, right? significantly larger. So we look at, let's go to our futures drop down here, and let's look at /ETH. Initial margin for one contract of the large Ethereum futures contract, the /ETH, 65,802. That's a pretty big chunk capital to hold for that initial margin. That's why perhaps you're starting to see more liquidity coming to either /MBT or /MET. And in terms of significance, $132 of initial margin on that micro Ether futures. Now, granted, small impact capital wise means this isn't going to be a home run in terms of the amount. So there's a tendency to, or perhaps a temptation from a psychological standpoint to lever up in terms of the number of contracts. Keep that in check until you understand how the contract works and how it trades, and you get some experience and some time on the water. Okay, so we're going to use /MET in this discussion. We're going to pop into our grid. I'm going to move over to the other side here, and we're going to take a look at what's going on. So we've been seeing that downward momentum kind of fading this upward move, and kind of from that same perspective as what we saw going on with silver, right? This is a potential transition point, right? We could see more downward move. We could see a larger upward move and a continuation of that. But at the moment, I'm looking at this downward momentum kind of fading that big, strong move that this made. And I'm going to look at trading this the same way that we looked at trading that silver contract, which is potentially to the downside here, right? And looking for that potential downside move. So what I'm going to do is I'm actually going to add to this particular chart a little bit of range to the downside, because I have an expectation that this is going to make a move to the downside. And so I'm going to look at this as maybe a bear flag. And I'm going to kind of draw my lines here to get a perspective of where this might move. If that's my move, and then this little pullback right here is my flag portion, I'm going to take this, the flagpole portion of the downside move, and I'm going to duplicate that, and I'm going to put it down to the downside. I'm going to kind of shrink this back, and I'm going to say, look, this has the potential to move to about the 35, I'm going to call it the 35.53 range right there. That's a possible downside move. And then looking at taking the trade off, if it goes back above this range, we could even be a little bit more maybe tighter on this exit. In this particular case, if we were to take the trade off, if it breaks back up above what this was, perhaps a level of support in this case. And I think that's what we might do here, is look at taking this trade off a little sooner rather than giving it that opportunity to move back to the upside. But that might be our trigger point to the upside if it does start to move in that opposite direction. So we're going to look at getting into this in the same way we did in that silver contract. I want to really quickly just kind of confirm where those levels are here in this price, right? So we've got that move to the downside. There's our potential trigger right there. And then downside would be kind of backfilling this gap that we saw 2 days ago in the Ethereum, or the micro Ethereum contract. So what I'm going to do is I'm going to right click, and we're going to do the same thing. We're going to do a sell custom with OCO bracket. We're going to take the trade off if it goes up to 36.75, actually 36.76. We'll call it 36.76. And we're going to take the trade off if it goes down to 35.53. And we're going to look at getting in the trade on that break of that level. In fact, it's starting to do it right now. So we're going to do a sell stop, and we're going to put that sell stop at 36.34. Okay, so we're going to make that 36.34 is our sell stop. We're going to get out of the trade if it comes down here to 35.53. So that's going to be our buy stop order. Whoops, I'm sorry. That's going to be our buy limit order. Buy it at that price or better, right? 35.53. We're going to make that 35.53. And we're going to make that good till canceled, and we're going to make our stop order, the order to take this off if it goes against us, 36.73. So that's going to be our buy stop. 36.73 is going to be our buy stop in this case. 36.73 is going to be our buy stop, and we're going to make that one good till canceled. Confirm and send, read through the order, make sure that that's what we want to have happen. Get into the trade if it's going down and it gives us evidence that it's going down. Get out if it goes up against us fairly quickly. So we're getting off the bus if the bus turns around and heads the direction that we don't want to go, and then getting off the bus at that specific limit price to the downside. So we're going to put this into our futures group. We're going to click on send, and we're going to fire that order off. And it's already starting to bleed against us, but we're going to watch this here for just a minute to see what happens. All right, cool. Now that's kind of that. We're looking at some bearish trades today. I think that's kind of the way that this is kind of shaping up and rolling. But we'll see if this bounces or if this reverses. We're starting to see that little tick. So I'm maybe a little bit technically worried that we might not get into this trade. But you know what? That is okay. If we miss a trade, it's okay, right? Half of this battle is 90% mental, right? Or something like that Yogi Berra said. All right, let's take a look at another one here. That's /MET. That's our micro Ethereum. And remember the risks associated with trading virtual currency futures and derivatives products. Make sure that you read those advisories. Let's take a look at this /ZC. This is corn, and we were talking about corn making that move to the downside, coming off the top of that move. Now, I think, if I remember correctly, let's go to our futures list. I think we have a micro corn contract too, right? So this is the big contract. The initial margin is $1,100. The tick size is 0.25. So our significant digits are these two right here. They move in 25 or 0.25 increments. Tick value moves from 4.18 to 4.19. That's $12.50. I'm sorry, that's $50. Each one of these points or ticks that moves, that's $12.50. Our notional value, $20,000 in this contract. But I think we do have a micro corn contract. Let's see. I'm pretty sure there is. Yeah, MZC, micro. So there's the MZC, also continuing in that downward movement. So tick size, a little bit different, right? So the decimal places, the significant digits change. This is our significant digit, moves from 0 to 5 to 0. Tick value, meaning 4.19 to 4.20 or to 18, would be a change of $5. And the notional value of the contract, $2,095. So our initial margin is going to be a tenth of that, right? /MZC is our micro contract. There are also smaller contracts too, XC as well. So there's some different variations. And this is one of the more liquidly traded products. Agricultural futures have been around for a long time and have been a part of the landscape. So taking a look, this is starting to roll potentially over to the downside. Again, you know, in terms of the liquidity, you notice that we've got a number of these bars where there is not a lot of trading happening here. All right. If we were to look at /ZC, you see that there's perhaps a little bit more liquidity. And to be honest, I'm not looking at the volume and open interest yet on this contract, on these contracts, but I can tell just looking at those candles, the fact that there's trading activity going on at those particular levels, and we could put things like the volume profile on to see that as well, that there is more activity here in the larger contract, which certainly I think in this particular case makes sense. Now, realistically, if we look at the /ZC and we look at that initial margin is not all as far as the size of that impact, not that far out of line for some of the other contracts that we've been looking at, right? And you're right, David. That may be one of the reasons why food companies, they're moving from corn syrup and high fructose corn syrup and ethanol production into sugar. And so there may be that, either seasonality part of it or that draw on or that perspective of speculating on that downside potential. So what we're going to do is we're going to look at this one, and we're going to look at entering this trade. If it breaks our support level here, I'm going to make this a little bit further to the downside. We're going to make that 418. Whoops. We're going to make that 418.75. We're going to take the trade off, and we're going to structure this exactly the same way. 418, we're going to take it off at 420. 25, and we're going to look at taking this trade off if it moves back down to the downside in this particular case. And actually, I'm going to go down to at least the midpoint of this contract, down to 415, right? Down to that 415 level. You can see that dashed line. That's the midpoint of that channel. So we're going to put this trade on. Right click, and we're going to get in at what we said was 418.75. So right click, and we're going to do a sell custom with OCO bracket, the same way we did before. And we're going to say, all right, this is going to be a buy or a sell stop at 418.75, right? So if it breaks below that level, get into the trade. We're going to leave that as a day order. We're going to get out of the trade at a buy stop here at 420. We'll make it 420. And we're going to make that one good till canceled. And we're going to get out of the trade if it goes down to 415, right? So we'll make this a limit order at 415. And we're going to make that one good till canceled as well. Now you can kind of see that. Now I'm going to also double up belt and suspenders, which is, I think that's probably, appropriate for trading corn, right? Let's create that alert. We're going to put in a single alert right there at that 420. We're going to make that at 420. If this marks at or above, send us an alert. Not that we're going to rely on the alert, but we're going to use that as our kind of additional backup, right? For that standpoint. We're going to click on confirm and send. We're going to read through this order. We see what our initial margin requirement is, $1,100. We're going to put this in our futures group. And we're going to click on send, and we're going to fire that order off. And that order filled as this touched that level. So we're going to see if this can make that move to the downside. We've got about 2-to-1 reward to risk potential here on this particular futures contract. So something to keep in mind. Now, we've also got, in terms of technicals, you've got this level of support right here. So that's going to be kind of a perhaps critical test of this contract if it moves to the downside. And you notice that it touched. This is the reason, one of the reasons for those exchange designated limit orders. Because notice what happened here. This came down, touched that level, triggered the order. We're in the trade, but it's starting to back off right away. The candle hasn't closed. It's not moving below that level, but it touched it, triggered us into the trade. Markets can move very quickly. And grain contracts, in fact, probably because of maybe, again, that liquidity and the volatility of the contracts, can and do go lock limit on a relatively regular basis. Now, I don't have specific statistics about how often, but that lock limit could prevent orders from getting filled. And a fast-moving market could put us in a situation where an order triggers and then fills at a much different price. And so that's the reason for those exchange-worked limit orders based on those protection points. And so it's a good idea to pay attention to that, right? All right, so just quick reminder as we kind of come back to wrap this up. Again, if you want to learn more about this, you can come back here to Trader Talks webcast. We do this every Tuesday morning. But if you want to learn more about futures in general, right, and futures markets, and you can see information about the futures markets, schwab.com/futures is a great place to go. If you want to come down here, we can click on corn futures, and we can see, the contract specifications. We can see, consider corn futures. You can hedge against portfolios that have, let's say you got a lot of Coca-Cola, right, in your portfolio. This might be something, or you've got a lot of gasoline in your portfolio. This is something that could be used potentially to hedge against that. So lots of information right here at schwab.com/futures. Use this as an opportunity to explore that information. So let's pop right back over here to our page. Let's see what we've done today. Those are all of our working orders that we've put in today. Here's our filled orders. We're in 2 of those. We've got a couple that are sitting and waiting, including that Ethereum, that micro Ethereum. Remember the requirements and to read those disclosures about virtual currencies, but that's a way to perhaps participate in the activity that's going on around those virtual currencies is through the futures contracts. And so there's our positions right down here at the bottom side. Guys, thanks for being here with me. My thanks to Michael Fairborn for helping out. My thanks, of course, to our great production staff, to all of you, and to our phenomenal review staff, Mindy and Nikki and everybody else that helps out. Thanks, guys, for helping us today. We will see you again very soon. We got a whole slate of stuff coming up today in our webcast schedule. I will see you later today for getting started with technical analysis. So have a great day, everybody. Bye-bye.